Hello, welcome. This is the Market Wrap. I'm Agam, Vakil. Well, it's been a day where we have seen some very mixed cues playing out as far as the Indian benchmarks are concerned. And yet, when it comes to the Nifty, we have seen a correction and a rather sharp one, even though the Nifty has managed to defend the 10,000 mark. We have seen a cut of around 120 points. But do remember, this comes on the back of gains of as much as nearly 1,000 points in the last 2 odd weeks. So, there was some amount of correction which was expected, and that's playing out in today's job trade. Let me very quickly take you through the gainers. We have Dr. Reddy's, IndusInd Bank, and Sun Pharma among gainers today. And today, the momentum was a little more with those which declined. So, ICICI Bank, Wipro, GAIL India, and Tata Motors, along with BPCL, were declining by around 3.5%. Titan Company was an interesting one because it did gyrate between green at one point in time, and then, of course, eventually came back in the red to close down by as much as 3.2%, despite the fact that the management was relatively positive as far as this commentary is concerned. In the broader markets, again, we have a reversal of the advance account ratio as to what we've seen in previously. So this time we have one gainer for two losers. And while we do have momentum in the likes of Dishman Carbogen or Sundaram Clayton or Shilpa Medicare, PC Jeweler, India Tourism Development, all of these which are locked in an upper circuit, of course, this is a case for Bharat Heavy Electricals as well, electronics, as well as something like an Indiabulls Integrated. But on the losing end, you also have solid profit taking in Vodafone Idea, which hit the mark of 12 yesterday, mind you. Inox Leisure, along with PVR, under a lot of, well, I would say pressure, considering their earnings came through. And Relaxo Footwear saw a sharp bout of profit taking, which is down around 8.4%. Second straight day in a row where we've seen such sharp cuts for Relaxo Footwear. Jindal Stainless, Prism Johnson, and Trident, among many others, which are losing out as far as the broader markets go. But on that note, let me get in our markets editor Niraj Shah for his thoughts on how things are panning out. Niraj, good afternoon.
Hey Agam, good afternoon. Well, a lot of technical traders will tell us that this seems to be a pretty unnerving kind of fall. In fact, one of the messages that I received, I'll tell you, yeah, it suggested that the 14 RSI divergence is found on multiple 5 minute candle bar, 15-minute candle bar, 30-minute candle bar, and a lot of other candle charts, and therefore it looks slightly weak. But that notwithstanding, I just think that it was likely a day of consolidation with some sharper cuts, and therefore a sharper correction is not ruled out entirely. I mean, we've had such a fantastic run up that a pullback might be in order. In fact, if you look at the last 3 or 4 days, defenses have come to the fore, right? I mean, you've seen, if you look at Nifty IT, Nifty Pharma, Nifty FMCG, turn by turn, we've had one, two, or three of them coming to the fore. Today it was Pharma, yesterday it was IT, FMCG's kind of been in the thick of things. So that end up market is doing very well, which probably seems to suggest that there is some merit in probably being a bit defensive in the current scenario. The question mark only is that can banks continue the corrective move downwards? And that would actually continue to put pressure. Today was the first day NBFCs, banks all corrected. Let's see if there is more in store.
Yeah, and this is something that I've been talking about over the previous few days when it comes to benchmarks, because we have started seeing a little more writing around the higher levels, and that's exactly how it played out. But from here on, we don't really know about how things will move on, because we've seen that 100-point correction. Can we expect a little more? Well, at least from the futures and options space, again, it's even Steven, so we don't necessarily know. It could also very well mean that there could be consolidation around here, around the 10,000 mark, and that we may not see a severe correction back to perhaps 9,400, 9,500. But again, I will wait for the data to come through. But for now, the indication here is based on what I've seen as far as closing prices go, is a little more consolidation around 10,000, and that is a wait and watch whether or not that comes about. But for now, we that's what's happening. Of course, we saw severe shorts in the likes of PVR, along with some amount of weakness building in some of these auto names as well. Besides that, again, it's indications of consolidation for now.
Yeah, but it's interesting. I think a couple of things out here in those. I mean, they tell you a message, don't they? With PVR and Inox, there was this whole rally believing that The stocks had fallen so much. Let's go out and buy them. And today, after the numbers, and this was only one week or 2 weeks of closed down in the Jan to March quarter, and we saw the kind of losses that these stocks have portrayed. So I'm shudders to think what will happen in the April to June quarter. Let's see. But yeah, these stocks corrected a bit today. The other thing was that contrary to what some of the economy opening up stocks have done in the last 2 days, some of the auto anchors actually did reasonably okay for themselves. So you had Bharat Forge, auto-related names, Bharat Forge, Ashok Leyland, Endurance Technologies, all doing okay. So that bucket was fine. But I just think that people were taking this numbers and the result performance of Jan to March and the expectations thereof is too seriously. I think the real damage is in April to June. And if indeed the consumer doesn't return back in July, August, September, right? Because Jan to Feb at least, or the better part of Jan to March, the consumer was right up there, buying, consuming, doing everything. What happens post March, that's where the devil lies.
Absolutely, Niraj, and I agree with you there. So we'll be watching out for some of those cues. But on that note, Niraj, we thank you so much for your perspective there, and be watching out for so much that we've spoken about in this fucking segment. And of course, on that note, it's a wrap on the markets, but there's lots more lined up. Stay tuned to Bloomberg Quint, and we'll keep bringing you more.